The headlines are just screaming about gold's incredible run, right? But what if I told you the biggest story in precious metals isn't the one everyone's watching? What if gold's little brother is quietly gearing up for an absolutely historic surge? All right, let's get into it.
I mean, you literally can't miss it. Gold has just exploded, up over 60% year to date, and it's smashed through records to hit almost $4,400 an ounce. The whole financial world is obsessed, with analysts talking about targets as high as 5,000. Central banks are buying it up, investors are piling in, and for most people, that's kind of where the story ends. But it's not even close.
Okay, so this is where it gets really interesting. While all the cameras are pointed at gold, another metal, silver, has been making moves that are just as explosive. And its story, well, it's driven by this incredible mix of forces that might just make it the more compelling opportunity. So you got to ask yourself, is gold just masking a much bigger shift that's happening right under our noses?
Let's look at the key piece of evidence right here, the gold to silver ratio. Just think of it like a price tag. It tells you how many ounces of silver it takes to buy 1 single ounce of gold. And as you can see on this chart, that price tag has been slashed. Back in April 2025, it was 100 to 1, which is a historical extreme. But by early 2026, it collapsed to just 57 to 1. Now, this isn't just some minor market wiggle. This is a seismic shift. It's screaming at us that silver is outperforming gold at a historic pace. This is the anomaly we need to understand. So let's dig into the two powerful engines driving this whole thing.
First up, engine number 1, the Industrial Revolution. We really need to stop thinking about silver as just some shiny metal for coins and jewelry. It's being totally repositioned as a strategic asset, something that's absolutely essential to the technologies building our future.
The AI boom isn't just happening in some digital cloud somewhere. No, it's a massive physical build-out. We are literally constructing enormous AI factories, these sprawling data centers that are less like office buildings and more like giant industrial powerhouses. This new economy is being built with concrete, steel, and silicon. And that physical reality creates an absolutely insatiable demand for some very specific raw materials.
And silver is right at the heart of this. As we see here, there are 3 unstoppable trends just gobbling it up. Take solar. As panels get more efficient, they, and get this, paradoxically require more silver, not less, to handle all that extra energy. Then you've got EVs. With all their advanced electronics and sensors, they use up to 79% more silver than a standard gas-powered car. But the real game changer? It's AI. The high-performance chips, the kind that companies like TSMC make, and all the complex cooling systems in these monster data centers are incredibly dependent on silver. This isn't about jewelry anymore. Silver is now a critical tech metal.
This quote from some industry analyst just nails it. The AI economy needs what they call a physical capital deepening. See, it's not just about the GPUs, the brains that train the models. It's about the entire ecosystem of specialized hardware, the networking gear, the power infrastructure, the thermal management systems. All of this physical stuff creates a structural, long-term demand for the materials they're made of. And to really get a sense of the scale here, just look at the power requirements. Total data center power usage is projected to jump by a staggering 160% by 2030. That's insane. Power, not money, is actually becoming the main thing holding back AI development. And every single watt of that new power has to be managed by hardware, switches, connectors, semiconductors, all of which rely on silver's unique conductive properties. It's literally the most conductive element on the entire planet.
Okay, let's shift gears to engine number 2 and see how this all stacks up. The inflation hedge. Because while silver's industrial role is being totally transformed, its traditional job as a monetary metal, that hasn't gone away. In fact, it's being supercharged, making it what some people call gold's higher beta brother.
Think about it. Geopolitical shocks can just change the entire economic landscape in a flash. A crisis like a military blockade in the Straits of Hormuz, and bam, oil prices skyrocket past $100 a barrel. This kind of energy shock immediately brings inflation fears roaring back to life, forcing everyone from investors to central banks to rethink their whole strategy and hunt for assets that can actually hold their value.
And this triggers a classic, almost instinctual investor reflex. When there's economic uncertainty, or governments are running up huge debts, or just printing tons of money, people start to worry that their cash is losing its purchasing power. So they look for an alternative, something that's historically held its value. And for literally thousands of years, that has meant gold and silver. It's a flight to safety. But here's the thing. Gold and silver play slightly different roles. Gold is the ultimate safe haven anchor. It's what central banks hoard to keep their currency stable during a crisis. Silver, on the other hand, is the higher beta play. It gets a boost from the same monetary fears, but its price moves are often way more volatile and amplified. And why is it amplified? Because unlike gold, this monetary rush is colliding head-on with that non-negotiable industrial demand we just talked about. The two engines are firing at the exact same time, creating this powerful, compounding effect.
So, the case for silver is obviously pretty compelling, but how you act on it can make all the difference in the world. And this brings us to a brutal truth about this market, one that really separates how amateurs and professionals approach it. And it's a truth that could save you a small fortune. So for a lot of people, buying silver means, going to a dealer and buying physical coins or bars. The problem? You often pay a huge premium over the actual market price, sometimes as high as 20%. Then you got to worry about storing it safely, paying for insurance. It's a hassle. Professionals? They often take a different route. They use things like exchange-traded funds, or ETFs, with tickers like SLV. These funds are super liquid, meaning you can buy and sell them just like a stock. They're designed to directly track the global commodity price set on the COMEX, which is the main market for metals, and you get to avoid all the costs and headaches of physical storage.
This slide really just asks the fundamental question every investor has to ask themselves. Would you be willing to convert your cash, which is sitting in a bank earning basically nothing and potentially losing value to inflation every single day, into a hard asset like silver? It's a really powerful thought exercise. On one side, you've got fiat currency, which is backed by a promise. And on the other, a tangible asset with thousands of years of history as money and a critical role in all of our future technology.
Now let's peek under the hood of that professional market. The COMEX is where the global price is set, but it operates with a huge amount of leverage. What this means is that for every single physical ounce of silver sitting in a registered vault, there are 7.4 paper claims. These are basically futures contracts that promise that silver. This massive disconnect between the physical supply and all the paper promises creates a pretty fragile system, and it's a major source of potential price volatility. And that pressure is measured by things like the COMEX stress index. The best way to think about it is like a pressure gauge for the physical supply. A reading of 72 is considered high. It's a signal that there's significant strain on the amount of physical silver that's actually available for delivery. If a whole bunch of those paper holders suddenly decided they want the real metal, this stress could cause a massive disconnect between the paper price and the real-world price of physical silver.
So, let's bring this all home. The 2026 silver story is all about the convergence of these two powerful and really distinct engines, the new age industrial demand and the timeless monetary demand. This isn't just about one catalyst, it's a potential perfect storm.
The bull case really rests on three main pillars. First, a massive technical event. Silver recently broke out of a 45-year consolidation base. That's a chart pattern that has technical analysts forecasting a huge move to the upside. Second, the fundamental industrial transformation we've been talking about, which repositions silver as essential for AI and the green transition. And third, just simple economics, supply and demand. For the sixth year in a row, demand is expected to be higher than supply, creating a persistent market deficit.
And this brings us right back to where we started. That historic anomaly, the gold-to-silver ratio. The move from 100 all the way down to 57 shows that this isn't just a theory. The reversion is already happening. Silver has been showing incredible relative strength against gold, and the data suggests this correction might have a lot further to run. So we end with this final question. Look, gold will always be that safe haven anchor. But with a powerful new industrial identity and its classic role as an inflation hedge, all happening while that gold-to-silver ratio is at a historic turning point, is silver finally about to step out of gold's shadow and into a spotlight all its own? That is the multi-trillion-dollar question for 2026. And whether it does or not, one thing is crystal clear. The story of precious metals is no longer just about gold.